Good afternoon this Thursday, July 28th. Well, the bears that had the grip of this market since early June through the end of last week, and recall last week's video was the sell the rumor, buy the fact video as we're looking for lows being made across the grain gauntlet, and that the Ukrainian safe grain corridor was not going to be able to live up to its reputation of what people wanted it to be, and the weather was just shifting too quick. And so this week we're seeing new highs every day in the grain trade as opposed to the prior 6 weeks where Mondays were always the high. So we got a lot to get through today. So let's get to it. We're going to talk about the weather, we're going to talk about yield potential, and then we will walk through the charts. The explosion in grain price, more specifically bean, is this 8 to 14 day outlook issued today through August 4th through the 10th. Above a normal temperature bullseye, right over Iowa, in through the dry southeast South Dakota, in through eastern Nebraska, even portions of Illinois gets nailed with these hot temperatures coming. Below normal precip, well, below to near below forecast, Iowa, Minnesota, Nebraska, South Dakota. All this large area of corn producing areas are going to suffer. And here's their forecast. This is out today. This is the noon report one. This goes through Friday, August 5th. Just take a look at those areas. It is just going to be dry. Take a look at some of these temps. I can't believe this. August 3rd, potential high, 115 degrees in southern portions of Iowa, 114 in the northeast. I mean, it's just basically 100-degree temperatures, this whole area for one particular day. It's going to be tough on the corn, and that corn finishing pollinating. Pretty much we still got pollination going above that line. Pretty much everything below here is done. So we're going to still catch a lot of corn and reduce that yield potential. This is the drought monitor. This was out today. It's through the 26th. Note, the gray is continued dryness, but the yellow is where they're adding dryness. And so we're getting more areas of the Corn Belt added into this drought concern. And so that's going to come back to roost. Also, the dollar topping out. As you're seeing a lot of commodities getting lifts right now. Today's close, here's yesterday's interest rate hike. We should have seen the dollar up here. All it could do was bump in the day higher and then go out terribly. And on a weekly close tomorrow, if we can close anything under 106.60, you have another lower close 2 weeks in a row since that high came in near 109. So a weakening dollar ultimately starts sending commodities higher. Now, if this was a grain chart with this kind of action, we'd kill this thing. But it is a grain market, it is a dollar market, so it doesn't die like grains do as easily. So let's get looking at these grains. Corn, all that action last week, they made it threaten that they were maybe after the 540, 560 major support valuation. They didn't. It was a one-off. Because of the joke of how this occurred in the closing minutes, I can almost imply that this did not occur. And that's important because if we say this occurred, we've got 5 waves down. We've got a bear market. I don't think we do. This is objective. This isn't technical. I'm saying, watching how this played out, this shouldn't have occurred. We have 3 waves down. We should be starting a 1. That was a deep 2. And we should be in a wave 3 rally that carries us into that 680 range. That we'll see. For now, tomorrow they're going to be pushing the 200-day moving average at the 623, 625 mark if these forecasts remain threatening into tomorrow. And I might add, this afternoon's Euro forecast did show better chances of rain a little bit next week for eastern Iowa, western Illinois, southern Minnesota. So maybe that keeps us stalled if we don't get a GFS matchup later today at 6 p.m. and tomorrow morning at 4:30. So that's something to watch for. I think we're going to see this 623, 625 area be resistance if it's not already tonight. Ultimately, if we pop higher, we have the 200-day moving average. That's this line. This would be the 44-day moving average. It's a faster one up here. That comes in at $6.40. But I want you to see this chart. Notice this moving average, how reliable it is on the 6-hour chart. Until we get topping, it gets vicious, then we fall out of bed. This here, too, is coming down. This is presently about $6.40. So $6.25 is probably our target to try to get to or hold into tomorrow. But ultimately on Friday through Monday, if we gap higher on Monday that this horrible weather is en route for August 3rd through August 10th, well, then the line of fight is going to be 640, 650. And if we can ultimately push higher, well, let's just go back to the daily continuation chart. We had our bottom in 2020. We had our explosion into 21. That's wave 1. We had a pullback into the fall was 2. Went into a wave 3. And now a real deep, nasty 4 that had to go to a 786 Fibonacci retracement of this high to this low. And note how it kind of maps out, how you can just see all this. Let's clear this out. See all this trading here? Notice how I can just draw a line across. And notice how it just carries. And that's how it found a low. So ultimately, Kansas State University is out today. They took the current crop ratings. They've got the corn yield at 175.7. We know next week's going to be down, and likely the week after that's going to be down. You start getting that crop yield down to 173 or lower. At about, when we use the harvested acreage numbers, we'll be about 82 million acres. You take 4 bushels off. There goes 300 million bushels. Your carryout is down to 12.50. Well, I got news for you. That's $8 corn again. So ultimately, we could see the winter corn contracts, December and March and May, work the way back up to $8 and just get another repeat of every May always being the highs. And maybe that's our setup again for next year. We'll see. Beans, explosion. Didn't even stop at $14. At least when it came up here before, you see this green line? See how they respected it? See how on a closing basis they kind of held before they died? Came up on a closing basis, they held before it took off, came back, held, and imploded. We walked through it. Now, even this moving average, look at the significance of this as we walk this C wave up. And, of course, these horizontal lines just reflect every dollar mark, and you can just see how the markets trade right at every dollar mark. So anyway, this implies we do know 15 will be a problem. But let's go to our intraday charts again. Look at these amazing purple lines in these intradays. Look at how it tags it. And then, of course, tags it here again, tags it again before it bang, bang, bang goes through. Comes down, tags, comes down, tags. Here, tag one day, dies through it. But the rally back up, tags. Okay, so why do I make all these points? Because we didn't just tag here. We went right on through a 50% correction right into here, which implies tomorrow just closing higher takes away that tagging look, and you're just slicing through. We should be slicing through straight to 1471, and I ultimately think the way this market is moving right now, how do we not do a 786 up to the $15.20 range now? Let's talk reality. Let's get off charts here for a while. The reality is, the USDA is trying to do 51.5 bushel to the acre on reduced acreage from June 30th. We slice just 2 bushels to the acre off these beans. You're at pipeline. How do we not take this November or January or March beans up to $16, $17? Unless, of course, we do have a record South American crop coming online and without a drought. So, and it is dry in Argentina and Brazil, by the way. But that can change, and it doesn't matter until we get towards November when they plant their crop. But what I'm implying is this weather, if this comes 70 to 80% to fruition, we're going to have these beans at $15.20, a 786 Fibonacci retracement. Because look at the explosive move that we've seen in just, this is an intraday chart, 6-hour chart. This was done in 4 days. So hang on to your hats unless the GFS tonight matches up with this afternoon's Euro that hints a little bit of rain for eastern Iowa and western Illinois and southern Minnesota. We could see this market retreat possibly tomorrow or tonight. We'll see. The GFS tonight is what they'll be staring at. Kansas City wheat. Well, here is our 60-day cycle, which, 1 day off, it can be that. July 5th was the low. And notice how the bulk of the vicious decline was arrested here. And when we do it like this, that's all that got through the July 6th low was that there. 3 drives to a low, closing above the net prior high. This one here, get this wheat up another dime tomorrow, get it over $8.99, and you're heading up into this range. More specifically, let's go to these intraday charts. Tag, 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 tag. Well, what do you think? We're going to tag this as this declines somewhere around 965 to 970 if we maintain the rate of ascent that corn and beans are going. How fast is it going to take to get us there? Well, that's the $64,000 question. My point is our target to the upside initially will be this, but ultimately in the wintertime, if the Ukrainian export corridor is not panning out, and keep in mind, half the Ukrainian crop was grown compared to last year. So there's not an abundant supply of wheat. Europe's going to be in trouble. India's going to have to import. So we could see prices do quite a bit of recovery into the winter And I think something targeting this halfway mark is where we're actually heading, probably into December or into January. But of course, corn and beans will have a hand in this as well. Let's take a look at the cattle market. Pullback today, corrections again. We are turning positive on this moving average purple line. We have a breakout on the downtrend line. Corrections on this cattle market, which ultimately I do think we're going to see this market way north of 150. We should find some legs here in this 146, 147 area and turn back higher if they can pull any more weakness off. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.